And the rest of the world, the US Fed's FOMC began yesterday. A rate decision is likely later today, US time. We'll get you those details tomorrow. Switching gears to electric vehicles, EV sales notch up 25% from the 1st April to 30th November period this year. But does low base of just 1 million need a faster growth? We'll discuss. A 100 crore investment by Aditya Birla Group. Aditya Birla Real Estate acquires 71 acres of land near Mumbai. The Reserve Bank of India has lifted restrictions imposed on two Edelweiss Group entities, ECL Finance and Edelweiss Asset Reconstruction Company, after both entities took the necessary remedial action. Our top story this morning, market regulator SEBI yesterday notified a new asset class between PMS or Portfolio Management Services and mutual funds and referred to it as Specialized Investment Fund or SIF. Now this SIF asset class will accept investments of 10 lakh rupees or more from investors across all investment categories. Let's understand this in detail with Kranti Batini, who joins us this morning. Kranti, good morning. Lovely having you back here on NEWS9 Live. Help us understand, what is SIF? We know SIP. What is SIF and how is this likely to impact your life and mine?
Good morning, Karthik. Pleasure to interact with you always. From SIP, we are moving towards SIF. After the humongous participation from the retail investors in the last few years, number of investors in India has tremendously gone up unprecedentedly, and the numbers have keep on piling up. So there is a need of different kind of products for the requirements of the investors. One is, and the risk appetite of the investors also have been going up, and we witnessed the kind of retail participation, especially in the F&O market is concerned, where the regulators are quite concerned. So one hand, for the reach of every investors in India, we have mutual funds, and they have gained so much popularity, and look at the number of portfolios and number of the assets under management that has grown up drastically in the past 25 years. And the PMS also last few years have gained its popularity among the high net worth individuals. So one is for the retail as well as HNI investors, we have mutual funds which gain the popularity in India. The other hand, for the ultra HNI and the investors who can afford a specialized portfolio management services, PMS, above 50 lakh bracket. The PMS products are there. Earlier, I believe 5-6 years back,
right,
the PMS was available for the investment of 10 lakhs also.
Right.
But SEBI has restricted the PMS entry level to 50 lakhs. So there is a need for a specialized product for these kind of investors who can afford between the range of 10 to 25, this kind of range.
Right.
They don't have any specialized product. So SEBI has come up with a notification that there is a need for a kind of a requirement for these kind of specialized investment fund, which caters to the needs of the investors who are little bit risk appetite is very high, are moderate. For those kind of investors, these kind of funds are suitable.
Right.
Normally, in a typical mutual fund, what happens is the risk taking ability of a fund manager is limited. So these kind of funds, the fund house or the fund objective can be little bit aggressive in terms of picking up the stocks, and having derivative products also can be included.
Right. So, Kranti, just for more clarity on this, it's a very interesting, category which has been introduced by SEBI now. I want to understand, as a mutual fund investor, I can easily flock on to any of these beautiful fintech companies and their apps and purchase these mutual funds myself. However, for a PMS service, there is constant information and intervention of the portfolio manager, and it's a very, very specialized, very individualized sort of a service that I get. Now, in between the mutual fund and the PMS, this new SIF category, is this going to be very individualized, very specialized, or are there going to be AMCs who will roll out SIF products just like they roll out MFs? And hence, as an investor, how do I go and participate in this investment class?
Karthik, with respect to the SIF is concerned, it's by and large works like a mutual fund, but the kind of risk profile or risk taking the fund objectives can be different when compared to the mutual funds are concerned. So the one thing is the objective can be changed, whereas in a mutual fund you can start with the 500 rupees. That's the minimum level one can start a mutual fund,
right.
Whereas in a SIF the entry level is
it'll be 10 lakh rupees.
Yeah.
But can I buy these SIFs off the shelf digitally or physically, or like a PMS, there is going to be somebody assigned who is going to help me make these investments?
By and large, it can be assigned to any kind of mutual fund distribution or fintech, because to gain the popularity, the fintech involvement or the distribution network should be quite strong. So by and large, it works like a mutual fund, but the risk profiling the fund objectives and the stock picking strategy can be by and large more aggressive when compared to the regular mutual fund process is concerned.
All right, Kranti, stay with us. Very interesting development from SEBI, but let's move on to the news coming in on the macroeconomic front. Finance Minister Nirmala Sitharaman assured the Lok Sabha yesterday, Tuesday, December the 17th, that the recent slowdown in India's GDP growth for the second quarter of this fiscal year FY25 is just a temporary blip, and that growth will pick up in coming quarters. Now, responding to a discussion on the supplementary demands for grants first batch 2024-25, FM said that the drop in the GDP growth in the second quarter has to be understood in a broader context. She also highlighted that government capex has grown by 6.7% year-on-year, indicating continued investment in infrastructure. Now, with these developments, she expressed optimism about improved economic performance in coming quarters. Kranti, great reassurance coming from Finance Minister, and she says that Q2 was a temporary blip. But going forward, if growth is actually going to offset the slowdown in Q2, where is that growth going to come from?
One thing I think the first half of the year, we had the general election, and also the second half, what we witnessed was there was erratic monsoons, and some areas there were floods, some areas there were high temperatures. So the growth has been disturbed, the domestic consumption has taken a toll. And also with respect to the government spending with the budgetary allocations are concerned, they could able to meet the 65% of the budgetary allocation with respect to the government spending is concerned. So the capex has been quite at a slow pace with respect to the first half of the year is concerned. So that has what we witnessed is softening of the growth and also the IIP numbers. Everywhere we witnessed some kind of softening. So second half, the government has been pushing the pedal hardly to accelerate the pace of the growth. So that's where the assurance and the reiteration is coming from the finance minister. And as we entering into the new calendar year, we are getting into the full-fledged budget for the coming new year.
Right.
So what we can sense is there is a faster pace of capex is going to go up, and also the FDA is going to go up, and also on the back of that, in the parliament we are witnessing a hard discussion of one nation and one poll.
One election,
that can be coming early. If that bill get passed, the government has to have very less time in their hand. So the pace of growth can be accelerated. The reforms agenda can be taken at a faster pace. So that can accelerate the growth pace at this point of time. That's where the finance minister is giving the assurance.
Right. Is it fair to assume, Kranti, that if the government wants a good report card on GDP growth, then the heavy lifting will actually be done by the government itself, and we should expect more capex investments by the government, because we still live in a high interest rate cycle, and that is unlikely to revise downwards until budget 2025 that you just alluded to.
Absolutely, Karthik. You made it a point. Okay, we were coming through a very tight monetary policy, And with the Fed rate decision in the next 24 hours, RBI is compelled to, with the new RBI governor, we need to see what kind of decisions the RBI is going to take under the new RBI governor. So that will give some kind of extra cushion to the growth.
Right. Okay, stay with us, Kranti. We'll just, stay on this for a little longer because the government's concerns over slower economic growth may continue even in the year 2025-26, although inflation is likely to soften. Now, Union Budget 2025-26, according to some people, may peg nominal GDP growth in the range of 10% to 10.5%. Remember, these are media reports coming in, source-based media reports, which NEWS9 hasn't been able to independently verify just as yet. But on the other side, there is a little bit of a conundrum, Kranti, and this is with respect to the number of tax filers. Now, again, data that came out in the Parliament yesterday, and Pankaj Chaudhary, MoS Finance, in fact, mentioned this to Parliament, that India has witnessed an income tax return filing growth between the last year and which is 2022-23 and financial year 23-24, with in the new year 8.09 crore returns submitted as compared to 7.4 crore returns the previous year. But even with this increased 8.09 crore taxpayers, it represents only 6.68% of the population, which means less than 7 out of every 100 people living in India are actually paying taxes. Now, we were talking about the budget earlier, Kranti. How does the budget 2025 and Finance Minister Nirmala Sitharaman ensure that this tax net widens so that our fiscal deficit concerns also get offset?
One thing, Karthik, of course, the GST regime has increased the strong revenue pool for the government.
All right.
So while coming to the direct taxes are concerned, the slab has been widened. Okay, right now, people who have around 7.5 lakhs income, okay, they are not comes under the tax net. Of course, they are liable to file the tax filing. So the awareness has been going up, but we are at a faster pace. As you rightly mentioned, just 7% of the population of the country are filing the returns. But because of the awareness, because of the fintech, and also the digitalization that's taking place, of course, we started with a slow pace of filing the returns, but expected to take off because of the disposable incomes are going up. Many of the new youngsters have been joining to the workforce. So the numbers are expected to go up. There is a lot of headroom for these numbers, Karthik, definitely. But we are at a slower pace. Definitely, I can expect the pace of growth is expected to accelerate in the coming years.
Right, fingers crossed on that one.
We have made a progress from 2% to 7%. So that are also important things to ponder upon that.
Yeah, I mean, the journalist in me cannot refrain from asking that with this low number of taxpayers, just 7% or so, is there a larger systemic problems when it comes to jobs and job creation and the salaries that people draw, at least in their early jobs, which results in zero tax filing as well? But anyway, let's stay on to the tax story. There's an update that the Income Tax Department is reaching out to taxpayers and non-filers via an SMS and email campaign aimed at addressing mismatches between reported transactions in the annual information statement and their income tax returns for FY 23-24 and FY 21-22. This campaign is set to encourage filings, revised or belated ITRs, and allows taxpayers to provide feedback on their AIS. Let's move on, Kranti. I want to bring you in on one more story that we are tracking this morning, and this is by way of EV sales. Well, the number of electric vehicle sales in India sold during this financial year has increased by 25% compared to the same months in the previous financial year. I'm talking about the months of 1st April to 30th November 2024. A total of 13.06 lakh electric vehicles, mostly buses and two-wheelers, were registered in the country, which is about 25.64% higher than just about a million or 10.39 lakh EVs registered during the same April to November period last year. Now, of course, we have the schemes of PLI for batteries, we have the PLI for energy storage and also auto components. But Kranti, this low base of just 10 million growing at 25%, is it nearly enough for India to meet its 30 at 30 target of 30% EVs by the year 2030? Are we on track?
Karthik, we are at this very early phase of electric vehicle emergence is concerned. Still the buyers, there is a dichotomy around them, whether to go for a ICE engine or whether to go for a electric engine. That's what the dichotomy is still there. But there are some investors who want to be on an affordable class. They are experimenting, still at a very experimental stage with respect to the EV, purchasing one more additional vehicle as a EV vehicle people are considering. Primarily, we don't have a robust charging network at this point of time, but the government is planning to spend around, both in the public and private partnership, around $2 billion, especially on the charging infrastructure is concerned in the next 5 years. That's what the plan. So we are at a very starting phase. We had the FAME, which is faster adoption of mobility in electric vehicle. They have been giving the incentives, so that has came to a standstill at this point of time. So some kind of, and also the entry levels for these EV cars, India is normally a entry level kind of a market. So if you have to see the volume growth, definitely we need to have an affordable EV vehicle. That's where the market is waiting, and we have only 3 players at this point of time. One is the Tata Motors, Mahindra & Mahindra, and Hyundai Motors, which have a high-end electric vehicles. But Maruti, they have not ventured. They are still in the progress of launching a EV vehicles for India. So most probably the volumes comes from Maruti. Once Maruti get into this game, we can see some kind of volume growth with respect to the electric vehicles are concerned. So still we are at a pace of a starting phase for the electric vehicle. Okay, we need to closely observe the developments in this space. One is the infrastructure. The second one is how the passenger utility game is going to be. By and large, as you rightly mentioned, one is this kind of growth has come with respect to the buses are concerned because of state government policies and some municipalities. They're implementing, some corporations are implementing the public transport system has to be in the electric vehicles. That's where the growth of numbers have been coming. But we need to see further momentum with respect to the EV electric passenger vehicles are concerned. We are still at a starting phase. There need to be a lot of infrastructure spends has to be improved along the highways to meet these requirements.
Right, absolutely. And you mentioned Maruti Suzuki. Well, 2025 is the year, Kranti, that Maruti Suzuki is going to unveil its electric vehicle portfolio in India. With that, Kranti, thank you so much for taking out time, being here with us on this Wednesday morning on News9 Live. We will have you back, of course, in coming days. Thank you so much for joining us today.
Pleasure.
All right, and moving on now, Aditya Birla or Birla Estates, a privately limited wholly owned subsidiary of Aditya Birla Real Estate, formerly called Century Textiles, has acquired a 70.92-acre land parcel in Boisar near Mumbai for 104.3 crore rupees, according to company filings on the stock exchanges yesterday. Boisar is the largest industrial suburb in the Mumbai metropolitan region, falling under the Palghar district of Maharashtra. The company has been on a buying spree to ramp up project launches in September. In fact, it purchased a 24.5-acre land near Mumbai from Hindalco for 537 crore rupees. Before that, in the month of June, the company had bought 16.5-acre land in Pune for 2,500 crore rupees for a housing project. Now, during the July to September quarter, AB Real Estate acquired ownership rights of 10 acres of land parcel in Mumbai's prime areas of Birla with a gross development value or GDV of 14,000 crore rupees, along with a 5-acre land parcel in Gurugram near NCR, Delhi with a GDV of 1,400 crore rupees. We'll bring you what your trading strategy on this stock should be on the next segment. And another item of news emerged yesterday night is by way of the Reserve Bank of India, which has now removed business restrictions that had been imposed on two Edelweiss Group entities, ECL Finance Limited and Edelweiss Asset Reconstruction Company, or ARC. As per RBI, the decision follows the company's successful implementation of remedial measures to address regulatory concerns. In May 2024, RBI had restricted ECL Finance from undertaking structured transactions involving wholesale exposures except for account closures or repayments in the normal course of business. Meanwhile, Edelweiss ARC was barred from acquiring financial assets, including security receipts, and restructuring existing security receipts into senior and subordinate tranches under the Securitization and Reconstruction of Financial Assets and Enforcement of Security Interest Act 2002. And we will be heading into a break shortly, but markets have opened, and this morning, let's see what the trading setup looks like. We've got, well, a flat opening for the market. The main indices, Nifty 50 and Sensex, open pretty much flat, and that seems to be the case in the broader markets as well. Remember, US Fed FOMC rate decision is going to arrive later today. There has been a selling pressure in US markets as well. Is the Indian market reflecting what is happening globally, or is there more to read into it? We will discuss this as well as stocks that you should look at trading or buying or selling or investing in today. And joining me on the show to discuss these trading strategies is going to be Angel One's Amardeep Singh. So stay tuned to News9 Live. We'll be back in just a bit.
B6 Mahindra Electric Origin SUVs.
Challenge is part of business.
Success to me means achieving a lot with limited resources.
It is the idea of bringing the best of East and West together.
India's neighborhood has been in turbulence all throughout.
Sheikh Hasina was forced to resign and take refuge in India.
Myanmar itself is facing an enormous internal crisis of sorts.
Periods of India's greatest strength was when the neighborhood did not have a problem with it.
There are events that are larger than your ability to control them. What you have to do is to make the best of those events and move forward.
This and more. Streaming on News9 Plus. News is now content.
Subscribe and get free vouchers.
This is Morning Brief at 9 on News9 Live. Thank you so much for joining back. We have with us now Aditya Singh, Senior Vice President, Research, Angel One, joining us today. Amar, good morning. Thank you for joining us here on News9 Live. First up, markets have opened pretty much flat. If we look at the heat map this morning, courtesy TradingView, you've got the entire BFSI sector in the red and the IT sector hoping for perhaps a positive news coming in from the US Fed's decision later today. What is driving the market mood today, Amar?
Yeah, I would say that overall markets have been witnessing some sort of selling pressure over the past few trading days. And primarily it's on the back of some heavyweight selling, like we've seen some sharp selling coming in Reliance. That's one of them. And HDFC Bank has also given up some gains. So earlier, the sort of movement which we had witnessed in the PSU banking space as well as the private banks, that somewhat tapered off. What's really holding the markets to a certain extent has been IT. So that has been supportive. But across the board, in the large caps, we definitely witnessed some sort of selling. But the good part is that amongst the mid cap and the small cap, we are seeing a lot of activity and across sectors. So that's one good thing which we are witnessing across. So only the thing is that needs to sustain. On the broader indices, yeah, we will witness choppy trading sessions because lack of fresh positive triggers, and also going forward expectations as to how the Trump administration looks at and takes decisions. So those things are something which the markets are really looking out from that perspective.
All right, so global cues is what the market is waiting for, and broader markets likely to be choppy. Let's get into specific stocks which happen to be in news today and get Aditya Singh's views on those stocks. First up, let's begin with the Adani Group owned Ambuja Cements, which will merge the acquired companies Saurashtra-based Sanghi Industries and Andhra Pradesh-based Penna Cement Industries with itself. Now, of course, this is a new arrangement with the existing acquisitions of Ambuja Cement, really trying to consolidate and further cement the cement business by the Adani Enterprises. What's your view this morning, Amar, on Ambuja Cement?
If you see, if you're looking at cement stocks, what we witness is that cement stock did correct and then they pulled back. If I am talking specifically about Ambuja Cement, so what we are seeing in Ambuja Cement, that it's caught in a trading range, because some of the technical indicators, if you look at, that clearly points towards that upside seems to be capped around the 600 mark. The stock has been trying to inch up higher post the sharp correction from almost 450 odd levels. Currently it's around 570. So I would say that wait for anyone looking at fresh entry, either should wait for a break above the 600 consistently, then you can expect some significant rally in the stock. Otherwise, the stock, as per technically charts, and also if you look at the fundamentals perspective, seems to be trading in a narrow range. Downside support for the stock is somewhere around the 530, 550 zone.
All right, so that is the view coming in on Ambuja Cement. But let's talk about the parent company, Adani Enterprises, also for a bit. Adani Enterprises also has been reeling under some pressure this entire year. In fact, we told you yesterday that Gautam Adani is no longer in the $100 billion club, and that, of course, comes by way of the kind of beating that Adani Enterprises has also taken over the year. The stock is down almost 15% year on year. So what do you make of Adani Enterprises, not just as a trading strategy for today, but going forward? Where do you see the stock, Amar?
See, if you look at the Adani Group stocks and Adani Enterprises, we've seen some very sharp volatility, which is which has been due to certain reports coming out. But the stock has been able to bounce back most of the time. So that's one interesting aspect, because in last year, January, February, in 23, the stock had literally collapsed from almost 4,200 levels to 1,000 levels, And then again, it rallied all the way towards 3,700 levels. Currently, it's around 2,500 or so, 2,482 to be precise.
Right.
So what it effectively means is that the company definitely has a lot of potential per se, but at times such reports which come out, they have an impact on the selling pressure by investors because when a company really becomes a size of Adani Enterprises or the Adani Group, so it's not only domestic investors, it's international investors also who keep a close eye and watch on the company, and any report which could be other way has an impact. So from that perspective, we are seeing this volatility. If I look at the Adani Enterprises stocks, as per the technical structure, I would say it's definitely trying to form a bottom. The recent low isn't likely to be breached in a hurry, which was around 2025 or so. It's around 2,500 levels, 2,480. But on the upside, it's not going to be easy for the stock to rally above the 2,700, 2,750 zone. So there is a possibility of a pullback. And once the stock starts sustaining above the 2,600 mark, so roughly 100 rupees from here, then you can expect a rally of towards 2,750, 2,800 levels. But that's it, where the stock could meet with some selling pressure. So that's it for Adani Enterprises.
So I think if I can paraphrase what you just said, we can expect maybe an upside of about 100 rupees or so, but the stock is likely to be a far distance away from its lifetime highs that we saw pre-Jan 2023. Let's move on now, Amar, to Infosys. News coming in from Infosys that the company is going to collaborate with Google Cloud to boost enterprise AI innovation and establish centers of excellence. Now, Infy stock, of course, we've seen the entire IT pack was in the green this morning. Specifically, Infosys, how do you view the stock today and as a long-term investment?
IT definitely has saved the day, and Infosys has also performed well. So if you look at Infosys, year till date is up by almost 28%, so which is quite good compared to the benchmark performance of Nifty, which is lesser than 12%. So,
right.
Having said that, if I look at Infosys, Infosys is meeting with some resistance. First, I'll talk about the technical perspective. So, from a longer-term perspective, Infosys is quite strong on the charts. It does meet with some sort of resistance around the 2,000 psychological mark. That's a range where, or I would say the level where Infosys is meeting with some resistance. It did manage to breach that level, but not able to sustain that level. So any pullback above that level, sustaining of that level, Infosys could rally towards the 2,100, 2,150 level. On the downside, the stock is now strongly supported around the 1930 odd levels.
Right.
And if you look at the fundamentals also, we are seeing a very strong US dollar. So that's and a weakening rupee. So that also is helping the IT companies to a certain extent. And also there were those earlier fears. So some of them are receding, and maybe it's investors are of the view that it wouldn't be as bad as expected. Right. So I think these triggers are really helping the IT stocks.
All right, positive triggers for the IT stock coming in with a depreciating rupee and perhaps some monetary easing by the US, which will add discretionary spending back to clients based in US, which will augur well for the IT companies. Now, I want to shift focus to more competition, Amar, emerging for quick commerce players like Zomato and Swiggy. It's not just Zepto. In fact, now we also have Ola, which has started a 10-minute food delivery service in Bengaluru called Ola Dash. How do you view Zomato and Swiggy in today's trade?
I think Zomato and Swiggy definitely they've built a brand name, and they also stand for the delivery because if I just give my example per se and our family. Yeah. There's regular ordering which we are used to, and at times they really help. So you get it in a very fast delivery and also economical perspective.
Right.
So I would say, and this is catching up very well, not only in tier 1 but tier 2, tier 3 cities, right. And the pin codes are expanding. So I would say this is a huge market which will explode. I would say there's no doubt about it. It will explode. Yeah, it will have a place for at least 3-4 players. And there the quality of service, because this is a very high quality and time bound service. So from that perspective, Zomato and Swiggy definitely are well placed. And the other players are also doing quite well, be it Zepto or for that matter, Ola is also getting into this business. They have their logistics, how they set their logistics in this case is something that needs to be worked out.
Right.
But yeah, I would say that this is definitely going to be an interesting space and a fast-growing space, no doubt. So one should be at least invested in a couple of stocks in this sector.
All right. So not just fast delivery, but fast growth also to be expected in both Zomato and Swiggy. Let's move on now, Amar, to Jindal Saw. The company is set to acquire a 31.20% stake in Renew Green Energy. Jindal Saw on your trading radar. Is this a stock that you're following?
Yeah, actually, if you look at Jindal Saw, the stock did rally, but I think it's tapered off. So the momentum which was earlier there, that seems to be missing, because the stock in the first week of October had made a high of almost 380 levels and then corrected towards 294.
Right.
And currently around 318 odd levels. So what we are seeing technically on the charts first is that the momentum is no longer there. It's more of a trendless stock. So it's good for a trading perspective. So because till the time we don't see the stock reaching the 340, 345 level, I would say it's more of a trading play. And on the downside, the stock is supported around the 280. So
Okay.
280 and 340, that's the range for the stock. Currently, it's around 318. So it's in a no man's land to say,
Right.
because your risk reward ratio wouldn't work out. But currently, and one of the, I would say some of the technical indicators from an intermediate term perspective, that is a medium term perspective, they are not very strong. I would say rather they are quite weak.
All
So
right.
effectively means is that higher levels will be sold into and the stock is in for consolidation for some time.
All right. Consolidation is the name of the game for Jindal SAW. Let's move on to JSW Energy now. And South Korea's LG Energy is reportedly in talks with JSW Energy to manufacture batteries for electric vehicles and renewable energy storage in a joint venture that would need an investment of over $1.5 billion. Now, JSW obviously getting into electric vehicles, and JSW Energy specifically getting into EV batteries. How does this augur for the JSW Energy stock this morning?
I would say, see, such news many a times they are already discounted, and that is clearly being reflected in the stock. And if I look at the stock again, this has a similar story as compared to the earlier stock which we talked about, Jindal Saw. Technically, I'm talking. So from an intermediate term perspective, it's very weak. Again, it's a consolidation which we are witnessing. Long-term trend, however, remains positive. So that's one good thing. On the downside, the stock is very strongly supported on the 640 odd levels. Currently, it's around 680.85.
Right.
Yes, sustaining above the 700, 710 mark, you could expect a spur towards 740, 750 levels. But there, the stock would again meet with a lot of selling pressure.
All right. And finally, I want to get your view now on another news item, and this is regarding the Aditya Birla Real Estate. The company's subsidiary Birla Estates has acquired a 71-acre land parcel in and around Mumbai for over 100 crore rupees. Now, how does this news impact the Aditya Birla Real Estate stock this morning?
So if you look at Aditya Birla Real Estate stock, so the stock the stock has had a dream run. If you look at the stock has witnessed a significant rally from almost 600 levels, sub 600 levels in February of 2023 towards 3,100 levels. Currently, it's around 2,700 odd or so. So again, here we are seeing some sort of topping out pattern in the stock. Though the long-term trend remains positive, this is a stock one can enter, but not at the current levels. You have to ideally wait for some correction. If you look at the levels to watch out for on the downside, I would say anywhere between 2,400, 2,500, that's a good level where one can look at some fresh entry. Because again, from an intermediate term perspective, it's very clear that the momentum has been lost and the stock is in a consolidation zone. So, and that's a good thing to have, because the stock had witnessed a one-sided rally, and it's always good that stocks consolidate for the next phase of rally when that materializes.
All right, Amardev Singh, thank you so much for joining us here on Morning Brief at 9 on NEWS9 Live. We hope to see you keep coming back to us. And with that, let's move into all the global stories that are making headlines today. Stocks fall. The Dow has dropped for the 9th straight session, awaiting the Fed's decision on interest rates. The US judge denies Trump's bid to scrap the hush money conviction. And there is some hope, at least that is what TikTok believes, that Trump would offer some hope to TikTok as it makes its last-ditch bid to avert a ban in the US. Meanwhile, in Europe, car makers are discounting electric vehicles as new emission rules are likely to kick in. And Congo has sued Apple in France and Belgium over a conflict in materials and minerals. China plans a record budget deficit of 4% of its GDP in 2025 as per a report. Meanwhile, Walmart in the US is teaming up with Meituan to boost China's e-commerce sales. And in China, the famed Alibaba group is to sell in-time department store chain at a loss of $1.3 billion.
सपना अकेले देखा तो क्या, एक साथ सच करेंगे, जब जुड़ेंगे तभी तो उड़ेंगे। श्री राम फाइनेंस हर इंडियन के साथ खड़ा है क्योंकि भरोसा है हमें,
जब जुड़ेंगे तभी तो उड़ेंगे।
श्री राम फाइनेंस।
It's not the fiefdom of politicians. They owe it to the people.
Matter is now more about faith of the millions of devotees than just political slugfest. Does that mean that I can't get a job in Chennai, although I may be best suited for that particular job? They have more civic sense, they have more of civility than all these men. My name is Sudha Sadanand. Welcome to the South Indian.
Challenge is part of business. Success to me means achieving a lot with limited resources.
It is the idea of bringing the best of East and West together.
Welcome back. This is Morning Brief at 9. A look at all the news coming from around the world, especially from the US this morning. US stocks fell on Tuesday with the Dow dropping for the 9th straight session. Investors are cautious ahead of the Fed Reserve's last policy meeting of this calendar year. Take a look.
U.S. stocks ended lower on Tuesday, with the Dow dropping for a 9th straight session as investors showed caution ahead of the Federal Reserve's last policy meeting of the year. The Dow shed 0.6%, the S&P 500 lost 0.4%, and the Nasdaq dipped about 0.3%. Markets are pricing in a quarter-point interest rate cut from the central bank at the conclusion of its two-day policy meeting on Wednesday. Investors will also be looking for any signs from Chair Jerome Powell on how aggressive the Fed will be in cutting rates in 2025. Jimmy Lee is CEO of the Wealth Consulting Group.
I think the Fed's going to cut. Obviously, that's where the market is right now, that they're going to cut tomorrow. But I think it's a coin flip on a pause in January. And I think, again, as they've been saying this whole time, Powell's been saying how data dependent they are. It'll really depend on the reports that come out between now and the decision to make in January. But tomorrow, I'm fairly certain that the Fed will cut. If they didn't, it'd be a huge surprise to the marketplace. And I think that a lot of investors would potentially use that as an opportunity to create some selling and some opportunities for volatility.
Data on Tuesday showed U.S. retail sales increased more than expected in November, consistent with the economy's strong underlying momentum. Stocks on the move Tuesday included Tesla, up more than 3.5% after at least two brokerages hiked their price targets on the stock this week. Pfizer jumped more than 4.5% after the drug maker forecast 2025 profit roughly in line with Wall Street expectations. And it was another record day for Bitcoin, which briefly crossed $108,000 for the first time.
All right, from Bitcoin to TikTok. Well, TikTok is pinning hopes on Donald Trump, hoping that this last-ditch effort could help avert the ban. Take a look.
TikTok is making a last-ditch bid to avert a ban in the US. It and parent company ByteDance filed an emergency request to the Supreme Court on Monday. They're asking for an injunction to halt the ban, which is set to kick in on January 19th. That's based on a law passed by Congress in April, which says a block can only be avoided if China-based ByteDance divests the short video app. The Justice Department has said that the company poses a risk to national security, given its access to vast troves of data on TikTok's 170 million US users. An appeals court has already rejected claims that the ban violates free speech protections. In their Supreme Court filing, the pair argue that Americans should be allowed to choose to view TikTok, free from what they call government censorship. On Monday, they were given a possible glimmer of hope by Donald Trump in his first news conference as president-elect.
You know, I have a warm spot in my heart for TikTok because I won youth by 34 points. And there are those that say that TikTok had something to do with that. Now, Joe Rogan did, and some of the other people that were recommended by my son Barron, he knew names. I said, who is that? Tell me, who's that? Dad, you gotta be kidding. I can't believe you don't know. And I did those interviews, and it was actually sort of cute. Do you want to know the truth? But we did them. And that had an impact, but TikTok had an impact, and so we're taking a look at it. But
during his first term, Trump had tried to ban TikTok, but the move was blocked in the courts. He has since reversed his position and said during this year's campaign that he would try to save the app. In the Supreme Court filing, ByteDance and TikTok argue that delaying the ban will allow justices to give a ruling and give the Trump administration time to make its own assessment.
All right, moving on to Europe. European car makers are trying to meet their targets of 1st January. These targets are on electric vehicles, and to meet those targets, they're raising prices on petrol vehicles while offering discounts on electric vehicles. Here's more.
European automakers are working hard to deal with a looming challenge. They face tougher emissions rules which could further hit profits across the struggling sector. They've reacted by raising prices of petrol cars and preparing discounts on electric vehicles. The European Union will dramatically lower its cap on automotive carbon dioxide emissions from January 1st. It means at least 1/5 of all sales by most car companies must be EVs to avoid heavy fines. But data has shown that so far this year, only 13% of all vehicles sold in the region have been electric. The tighter rules come as the sector is already dealing with excess capacity due to underwhelming sales and Chinese competition. It's led to profit warnings from majors like Volkswagen, Stellantis and others in recent months. One analyst has said the companies will need to sell more EVs at a time when consumption is being put off by political and economic uncertainties and falling EV subsidies. EVs also cost more to make than traditional vehicles. With just weeks to go, Europe's politicians have urged Brussels to rethink the targets. But European Automobile Manufacturers Association Chairman Luca De Maio says car makers are getting to work and eager to avoid fines that could reach $15.76 billion. VW, Stellantis and Renault have raised the prices of petrol engine models by several €100 in the last 2 months. Analysts see this as an attempt to curb demand for heavier emitters and make pricier electric models appealing. But a source close to one European automaker warned the strategy could backfire. They said raising petrol car prices should help close the gap with more expensive EVs, but may not generate enough EV sales due to weak market growth. Sales in the region are around 1/5 lower than pre-COVID.
All right, from Europe, let's move to China. And China is planning a record budget deficit of 4% of its GDP for 2025, up from 3%, which was estimated earlier. Now, all this comes at a time when China is adding stimulus to boost the weak consumer demand and also try and fight the potential tariff war with US under the new President Donald Trump's administration starting January. Take a look.
Chinese leaders have agreed to raise the budget deficit to 4% of gross domestic product next year. The number would be the highest on record. That's according to Reuters sources, who also said Beijing will stick to an economic growth target of around 5%. The new deficit plan compares with an initial target of 3% of GDP for this year. It's also in line with a more proactive fiscal policy outlined by leading officials this month. The additional 1 percentage point of GDP in spending amounts to about $179.4 billion. The sources said more stimulus will be funded through issuing off-budget special bonds. These targets are usually not announced officially until an annual Parliament meeting in March, and they could still change before the legislative session. Beijing did not immediately respond to a Reuters request for comment. The stronger fiscal approach planned for next year forms part of China's preparations to counter the impact of higher US tariffs. They're expected to rise upon the return of Donald Trump as US president in January. Reuters reported last month that government advisers had recommended Beijing not to lower its growth targets. The world's second largest economy has struggled this year due to a severe property crisis, high local government debt and weak consumer demand. Exports have been one of the few bright spots, but that could soon face US tariffs over 60% if Trump delivers on his campaign pledges. Analysts believe China is likely to rely heavily on fiscal stimulus next year, but could also use other tools to deal with the impact of tariffs.
And staying with China, Alibaba has announced it will sell its in-time department store chain at a $1.3 billion loss after buying it for almost twice the amount 7 years back. Here's why.
Alibaba is selling its in-time department store chain and booking a $1.3 billion loss to do so. The Chinese giant bought the company for twice that amount back in 2017. At the time, it wanted to expand into bricks and mortar retail. Now Alibaba is taking a hit as it speeds up a restructuring process, aiming to focus on its core e-commerce business. Last month it said it would integrate its Chinese and international platforms into one operation. That follows a move the previous year to split into 6 units and reshuffle top management. It's the company's biggest ever revamp and comes amid intense competition from rivals like Temu and TikTok. They've been targeting cost-conscious consumers with rock-bottom prices on everything from headphones to sweaters. Weak Chinese consumer spending has also put stores of all kinds under pressure. Alibaba is selling in time to a consortium comprising China-based clothing maker Youngor Fashion and members of the department store's management. It may also look to sell other consumer sector assets, including grocery business Freshippo. In April, Alibaba co-founder Jack Ma expressed support for the restructuring efforts in a lengthy memo to employees and also acknowledged past mistakes.
All right, that's all we have for you on Morning Brief at 9. News and updates will continue right here on News9 Live. Up next at 10 o'clock, Sriya Kundu will bring you all the latest news that you must look out for. Thanks very much for watching.
In the chaos of battle, one weapon stands as a silent reaper of the battlefield. It can kill at ranges of over 3 kilometers. Just one precise shot can shatter enemy lines, disrupt entire formations